So everyone's talking about whether the U.S. economy is going to have a soft landing or if things are going to get a little turbulent.
Yeah, soft landing, that's the big question, right?
Exactly.
Whether we can avoid a recession.
Right. And I think for a lot of us, it's
Yeah.
like, okay, but what does that actually mean? Like what's at stake here?
Totally, yeah. What does it mean for my job, my life, like how much things cost?
Exactly.
How much my rent is.
And we've been digging into some recent expert analysis on this, and we're going to try to break it all down.
Yeah, we're going to do a deep dive on this soft landing idea.
Yes, exactly. A deep dive.
Try to make sense of it.
And figure out what it means for us.
Yeah, what does this actually mean for people?
So basically, when economists talk about a soft landing, they mean, can the economy slow down enough to get inflation under control without completely stalling out?
Right. Yeah, it's a delicate balance, isn't it?
Yeah.
You don't want to slam the brakes too hard.
Right, because then you end up with a recession, and nobody wants that.
Exactly. Yeah, exactly.
So the Federal Reserve, they're like the ones at the controls here, right?
They're like the pilots trying to bring this plane down gently.
Exactly. They're
Right.
trying to guide this whole process.
And this analysis, it really highlights that the Fed is taking a very data-dependent approach.
So they're not just, like, sticking to a predetermined plan. They're adjusting based on what the data tells them.
Yeah, exactly. They're constantly analyzing indicators, things like inflation, consumer spending.
Okay, so like the consumer price index, things like that.
Exactly. They're looking at all of that to see how the economy is responding.
So it's not just like autopilot then. They're really having to make judgment calls as they go.
Yeah, it's a very dynamic situation.
Okay, so that's interesting.
It's not just a one-size-fits-all approach.
So what are some of the, and we hear a lot about the challenges, but what are some of the positive signs that this analysis is pointing to? Like what's giving economists hope that a soft landing is actually possible?
Well, one really promising sign is that inflation does seem to be cooling down a bit.
Okay.
Now, it's not like plummeting,
Right.
but it is moving in the right direction.
Okay, so that's encouraging.
Yeah, it's not getting worse at least.
Right.
So that's a good sign.
What else?
Another bright spot is the job market,
Okay.
which has remained remarkably resilient.
So people are still working, which is obviously good for the economy.
Yeah, people have money to spend,
Right, exactly.
which keeps things moving.
So more people working usually means more people spending, which is good for businesses.
Right, exactly. It keeps the economy humming.
Okay, so we've got inflation, at least not getting worse, and a strong job market.
And on top of that, the economy, while the growth has slowed down a bit, it is still growing.
Okay, so it's not like we're shrinking?
No, it's more like a controlled descent
Okay.
rather than a free fall.
Okay, so there is some good news.
Yeah, there's definitely some positive signs.
It's not all doom and gloom.
No, not at all.
But of course there are risks, right? I mean,
Always.
this analysis doesn't shy away from that.
Of course not. That would be unrealistic.
So what are some of the things that could throw us off course? Like, what are the big what-ifs?
Well, one concern is what the analysis calls stubborn inflation.
Okay, so what if those prices we talked about, they don't keep falling?
Right. What if they level off, but at a rate that's still too high?
Okay, and then what happens?
Well, that could force the Fed's hand a bit.
Okay,
They might have to raise interest rates even higher than anticipated.
and that's where things could get a little dicey, right?
Yeah, it could really put the brakes on economic growth.
Right, like too much of a slowdown
Exactly.
and potentially even trigger a recession, which is like the thing we're trying to avoid in the first place.
So it's a tightrope walk for sure.
Okay, so inflation is one big if.
Right.
What else? What are some of the other potential bumps in the road?
Well, aside from what the Fed does, there are also, external factors that could impact things.
Things that are outside of our control.
Yes. Exactly. This analysis actually uses the term global chaos.
Ooh, that sounds a little ominous.
Right. Like, we could be doing everything right here in the U.S., but if there's a major global event...
It would still impact us.
Exactly. Things like geopolitical instability.
Like wars, conflicts, that kind of thing.
Exactly. Or trade wars. Those can have a ripple effect across the entire global economy.
So even if things are relatively stable here, we're not immune to what's happening in the rest of the world.
We're all interconnected, right?
Okay, so we've got inflation, we've got global uncertainty. Anything else keeping economists up at night?
Well, this analysis also points to corporate debt as a potential risk factor.
Okay, so companies owing money. How does that play into all of this?
So you know how interest rates were really low for a while there?
Yeah, like historically low?
Right. Well, a lot of companies took advantage of that and loaded up on debt.
Makes sense when money is cheap to borrow.
Exactly. But now that interest rates are rising, those loans are getting more expensive to pay back.
So now it's coming back to bite them.
Right, and this analysis suggests that some companies, especially those that are carrying a lot of debt, might start to struggle.
Okay, so we could see some companies going belly up.
It's definitely a possibility, especially if the economy slows down too much and they're not bringing in as much revenue.
Okay, so we've got a lot of pieces to this puzzle.
We do.
We've got inflation, global uncertainty, corporate debt.
And how the Fed responds to all of it.
Right, exactly. So given all of that, what does this all mean for, for us regular people?
Right, because that's the big question, isn't it?
Yeah, like how does this impact my 401k, my investments, my ability to, buy groceries?
Exactly. So let's talk about the market implications of all of this.
Okay, let's do it.
Historically, a soft landing has been good news for the stock market.
Okay.
When the economy is stable, companies tend to do well, profits go up, investors are happy.
So if we get that soft landing, we could see the stock market continue to rise.
Potentially, but of course there are no guarantees.
Right. Always got to add that disclaimer.
Yeah, of course. But it's important to remember that not all stocks are created equal.
Meaning what?
Some sectors might benefit more than others depending on how things play out.
Okay, so it's important to be selective about where you're putting your money.
Exactly. Diversification is key, especially in times of economic uncertainty.
So don't put all your eggs in one basket, as they say.
Precisely, spread your investments around. Different sectors, different asset classes.
Okay, what about bonds? How do they factor into this whole soft landing scenario?
So if inflation does cooperate, and the Fed doesn't have to slam the brakes on the economy too hard, we could see bond yield stabilize or even decline.
And that's a good thing for people who own bonds.
Potentially. Yeah, lower bond yields can signal that investors are anticipating slower economic growth and lower inflation in the future, which can be good for bondholders.
Got it. So potentially good news for bondholders if we get that soft landing. But we've also been talking about the global impact of all of this. How does a potential soft landing in the U.S. play into the bigger economic picture?
Well, the U.S. economy is a major player on the world stage, so what happens here has ripple effects globally.
Right. We're kind of a big deal.
A soft landing in the U.S. would likely boost global trade and investment, which would be positive for a lot of countries.
Okay, but...
Yeah, there's always a but, isn't there?
Right.
Even if we have a smooth ride here in the U.S., it doesn't mean the rest of the world is in the clear.
Right. Other countries are dealing with their own issues.
Exactly. Inflation, recession risks, you name it.
So it's not just about us sticking the landing. It's about whether everyone else can, too.
That's a great way to put it. We're all interconnected here. What happens in one part of the world can definitely impact everyone else.
It's like that expression, a rising tide lifts all boats.
Right. Or in this case, maybe it's more like turbulence in one spot can be felt throughout the whole system.
Exactly. So we got to keep an eye on the global situation, too.
Absolutely.
Okay, so if we can't predict the future with, 100% certainty.
And we can't, right?
No crystal ball. What can we do? How do we navigate this whole thing as, regular people trying to make sense of it all?
Well, the best thing you can do is focus on what you can control.
Okay, I like that.
Stay informed about what's happening both here in the U.S. and globally.
Right, no burying our heads in the sand.
Exactly. And then think about your own financial situation. Make sure you're diversified.
Don't put all your eggs in one basket.
Precisely. And most importantly, don't panic.
Easier said than done sometimes.
I know, but seriously, staying calm and making rational decisions is key.
So knowledge is power, right?
Absolutely.
Yeah.
The more you understand about the economy, the better equipped you'll be to navigate whatever challenges come up.
It's like having a roadmap, even if there are a few detours along the way.
Exactly.
Well, on that note, I want to thank you so much for joining us for this deep dive into the economy and the whole soft landing debate. It's a complex issue.
It is.
But hopefully we've shed a little bit of light on it today.
I hope so too.
And given our listeners some things to think about as they navigate their own financial journeys.
That's what we're here for.
So to our listeners, thank you for tuning in, and we'll see you next time for another deep dive.
Thanks, everyone.
Bye for now.